A MACD bearish crossover is a significant technical indicator in trading that signals a potential shift from bullish to bearish momentum in a given financial instrument. The moving average convergence divergence, MACD indicator, is composed of two lines. The MACD line, which is the difference between the 12-day and 26-day exponential moving averages, EMAs, and the signal line, typically a 9-day EMA of the MACD line. A bearish crossover occurs when the MACD line crosses below the signal line, suggesting that the short-term momentum is weakening compared to the longer-term trend. This crossover is widely regarded as a signal to prepare for or initiate short positions, as it often precedes a downtrend or price correction. However, its reliability increases when confirmed by other indicators or price action. For instance, if the MACD bearish crossover happens above the zero line, i.e. both MACD and signal line are positive, it may indicate a mild retracement rather than a full reversal, whereas a crossover below the zero line typically carries more bearish strength and confirms downward momentum. In practice, many traders wait for confirmation such as a break of key support levels, an increase in volume on the downside, or divergence from price action, where price makes new highs while the MACD does not. Additionally, the histogram associated with the MACD, which shows the difference between the MACD and signal line, can help visualize the intensity of the crossover. Shrinking histogram bars before the crossover suggest weakening bullish momentum, while expanding negative bars after the crossover reinforce bearish conviction. Although the MACD bearish crossover is a powerful tool, it is not without limitations. It can lag in highly volatile markets and produce false signals during periods of consolidation or low volume. Therefore, successful traders often integrate MACD crossovers into a broader trading plan, using support and resistance zones, trend lines, and candlestick patterns for added context. The time frame on which the crossover occurs also plays a critical role. For example, a bearish crossover on a daily chart carries more weight than one on a 5-minute chart, as longer time frames filter out noise and represent broader market sentiment. Some traders further enhance their analysis by looking for bearish crossovers on multiple time frames to confirm the overall trend direction. In trending markets, especially downtrends, a MACD bearish crossover can also serve as a signal for re-entry after a temporary pullback. Conversely, in ranging markets, it may be less reliable and caution is advised. Traders also monitor whether the crossover is sharp or gradual. A steep crossover typically indicates stronger momentum shift than a flat one. Moreover, when the crossover is accompanied by overbought conditions on other momentum indicators like the RSI or stochastic oscillator, it adds further weight to the bearish outlook. Ultimately, while the MACD bearish crossover is not a guaranteed sell signal, its value lies in its ability to highlight changes in momentum, helping traders make more informed decisions when combined with other technical and fundamental factors in a disciplined trading strategy.